World Bank lauds Kenya for reducing poverty rates. Egypt to get $1.1 billion from International Islamic Trade Finance Corporation to fund commodities imports. And Morocco's poor left behind by development boom. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. We get the show started now with the markets, and here on the African continent, while other markets gained heavily at intraday, the Nigerian stock index was down marginally. The index traded 0.03% lower at midday. South Africa's JSE index recovered some of the ground it lost in the previous session after the economy contracted in the third quarter to trade high at 1.17%. Egypt also was up 1.16%, while Kenya closed in the positive on Tuesday. In the Middle East, Saudi Arabian stocks eased at intraday, emerging the only loser at the time as investments continued to flow into oil giant Saudi Aramco's initial public offering. The Saudi index edged down 0.55%, with ROG Bank falling 0.5% and National Commercial Bank sliding 0.4%. The Qatari index was up 0.84%. In the UAE, Dubai and Abu Dhabi stock markets were closed for the last three sessions for public holidays, and both gained as trading resumed today. The Dubai index rose 0.63% as market heavyweight Emirates MBD rebounded 2.1% from a 2.5% slide in the last trading session. In Abu Dhabi, the index was up 0.34%, with Telecoms Group Etisalat adding 1.4% and First Abu Dhabi Bank gaining 0.3%. And in Europe, stocks were slightly higher in the morning as investors awaited economic data and monitored the prospect of a longer, broader trade war. Chelsea has more to tell us. Hello, Chelsea. Good afternoon. While concerns over U.S. trade policy continue to rattle markets after U.S. President Donald Trump said he could wait until after the 2020 election to strike a trade deal with China, what would another year of trade tensions mean for markets?
I think another year of trade tensions would be really difficult for investors, especially given how much of an impact this has already had. But there's been a lot of whiplash over the past couple of days. Yesterday and on Monday, there was obviously a pretty dramatic sell-off across global markets as Trump seemed to sort of put the goal post after the 2020 election. Today, that's sort of reversed, and a lot of markets are up as China and the U.S. Maybe appear to be a little bit closer to a deal. There was a Bloomberg News report yesterday that said China and the U.S. are getting closer to an agreement on tariffs to roll back, which has really been the sticking point in these negotiations. But I think for investors, they're becoming increasingly cautious about this trade deal narrative, just because of how much back and forth there's been since it was announced in October. And even if they do strike a phase one deal, it's not clear at this point what that would include, whether that would include a rollback of the tariffs that have really dented global business and global trade, whether that would include a delay of the $156 billion in tariffs that the U.S. is threatening on China that are supposed to go into effect in 2 weeks, and what this would mean for some of the broader issues between China and the U.S., things like technology transfers. So even if they are able to strike this phase one deal, it does appear that it's going to take a long time for them to really to solve this trade problem.
Let's look at some corporate news there. Volkswagen's offices were raided on Tuesday by German prosecutors as part of the latest probe into the car maker's diesel engines. Now, when will Volkswagen be able to put the emission scandal behind it?
I think, the timeline for fully wrapping up all of these diesel-related investigations is it's going to be a long process. You know, this diesel emissions cheating scandal really broke ground in 2014, 2015, and it's still playing out. Volkswagen has already spent about 30 billion euros settling some of these charges. A lot of that was in the U.S. In Germany, they are now facing new investigations. In September, some of their top executives were indicted for defrauding shareholders. So that's another an ongoing investigation. The investigation that this raid appears to be linked to is into individuals who were somehow connected to a certain engine that prosecutors have been looking into for other emissions fraud. So it's not clear how that's related to this probe into the executives at the company, but they're certainly still facing regulatory probes here in Germany, but they're also still facing a lot of lawsuits around the world. So the UK has recently launched a class action against Volkswagen. They're also facing a potential class action type lawsuit here in Germany. So there's still a lot of potential legal fees and settlements that Volkswagen is going to have to take over the next couple of years.
And in another development, Google's founders are stepping down and giving control of the parent company Alphabet over to company executive Sundar Pichai. How do investors feel about this change?
Investors have been actually pretty happy about this news. Larry Page and Sergey Brin were obviously have been a huge part of this company since they founded it in 1998 in a garage as Stanford students. But over the past couple of years, there's been a sort of an unconventional leadership structure at Alphabet that a lot of investors haven't been super happy about. So in 2015, they split the leadership between Larry Page, who was sort of handling these more futuristic projects, and Pichai, who was overseeing Google. And that sort of created this dichotomy and a lot of confusion over who was really in charge and who was really taking direction. So I think for investors, they're happy to see a more cohesive leadership structure. But Pichai still has a lot of challenges going forward. The company is facing a lot of regulatory and antitrust investigations really around the globe, here in Europe and the US as well, and also sort of a cultural backlash within Google over sort of the political tone within the company and some of the projects that they're working on. So I think while investors are happy to see this, there's definitely still a lot of work to be done.
Okay, Chelsea, thank you for the update. Enjoy the rest of the day.